Fresh into the working world and feeling a bit lost in the financial maze? We've all been there. Today, we're diving deep into the top money priorities you absolutely need to know now that you've started earning that paycheck. From 1 to 10, we've got some golden nuggets that'll set you leagues ahead in managing your finances. Ready to master the money game? Let's roll. Number 1, utilities and essential bills. Let's start with one of the more obvious items. Utilities and bills are the core expenses that ensure you're living comfortably and securely. We're talking electricity, water, heating, internet, and so on. In the US, households typically spend over $5,000 annually just on utilities, or about 10% of their income. Pretty high, right? But it's unavoidable, as it's a necessary expenditure to keep our lives running smoothly. Now, here's a tip. To effectively manage these expenses, list down all your monthly bills, note their due dates, and automate payments if you can. This ensures that you won't miss any payments. Plus, many providers like your power company offer insights and suggestions on how to reduce your consumption and save on bills, so always keep an eye out for those. Utilities are essential, but you can always try to lower them. Number 2, groceries and food. Next up is groceries and food, because everyone's got to eat. On average, an American household also spends about 10% of its disposable income on food, with around 60% of that going to groceries. And yes, those fancy lattes and takeouts do add up. A practical approach to minimizing this expense is to create a monthly food budget. Work out how much you're comfortable spending per day, and then just multiply to arrive at your monthly budget figure. Maybe top up a little extra for weekends, too. Always stick to a shopping list when you hit the supermarket, and maybe even try out meal planning to optimize costs. Eat at home, or bring food to the office whenever you can, too, because dining out is expensive. If you want to level up, using cashback apps or loyalty programs at grocery stores can score you some awesome deals and savings. Number 3, emergency fund. Life can throw curveballs, unexpected car repairs, medical emergencies, or even sudden job losses. So think of your emergency stash as your financial safety net. A recent Bankrate study highlighted that only about 40% of Americans would be able to cover a $1,000 emergency expense from their own savings. That means that the other 60% or so are expecting to have to borrow or sell something to come up with the cash. That's where an emergency fund comes in. Ideally, you'd want to save up 3 to 6 months' worth of living expenses. Start small if you must. Even a few dollars a week can build up over time. Setting up an automatic transfer to a savings account specifically for this purpose can make the process seamless. Remember, emergencies can happen to anyone at any time, even if you're new to the workforce. Number 4, rent versus buy. Renting versus buying is an age-old debate, and it's something that you should give serious thought to. It can have a big bearing on your future finances, so it's undoubtedly a big decision. Renting offers flexibility, but you're not building equity. Buying, on the other hand, can be an investment, but it comes with its responsibilities and a hefty initial cost. And home prices aren't guaranteed to go up, as we learned from the 2008 global financial crisis. Did you know that in some cities, the median home value can be over 10 times the median annual household income? That's a serious chunk of change. Here's what you can do to help arrive at a decision. Assess your long-term goals, financial stability, and the housing market in your desired area. Tools like rent versus buy calculators available online can provide insights tailored to your situation. Always remember that neither option is universally better. It's about what fits your lifestyle and financial goals. Number 5, debt repayment. What's the deal with debt? Well, most of us will face it at some point, whether it's from a mortgage, credit cards, or personal loans. You may already have some, of course, in the form of a student loan. As of late 2022, the average U.S. household had just over $100,000 in debt. That's a pretty big number. Carrying debt, especially high-interest debt, can feel like you're dragging a heavy chain everywhere you go. So, what to do? There are a couple of ways to attack your debt. Go for the avalanche method, where you prioritize paying off high-interest debt first, like those pesky credit cards. Or consider a strategy like the snowball method, where you tackle small debts first for motivation. Either way, it's important to set money aside on a monthly basis to ensure that you're constantly chipping away at that debt pile. Number 6, building your credit score. Your credit score is like your financial reputation. A high score can open doors, from snagging that dream apartment to getting better rates on loans. As of end 2021, the average FICO score in the US reached an all-time high of 716. So people are generally getting better with credit. But how do you personally get there? Start by making a habit of paying all your bills on time every single time. Automation can be a big help here, as we just talked about. Also, try to keep your credit card balances low as a percentage of your limit. And be cautious about applying for too many credit accounts at once, as that can be taken as a sign of financial distress. Check your credit report for errors every now and then, too. You'd be surprised how often they pop up. Remember, building credit is a marathon, not a sprint. Stay consistent and you'll see the rewards. Number 7, insurance coverage. Insurance typically isn't very high on most people's list of priorities, but that's a grave mistake. Think of insurance as your personal shield against the unexpected. Accidents, illnesses, even natural disasters. In 2019, about 8% of U.S. residents, or over 27 million people, didn't have health insurance. That's a risky gamble. If your employer provides health insurance coverage, great. But insurance doesn't stop there. There's auto, home, life, disability. The list goes on. And of course, it's a risk to have your insurance tied to your employer, because that leaves you exposed if you're ever between jobs or need to take a break from the workforce. How do you navigate this? First, assess your personal risks and what you can financially handle in terms of a monthly premium. Then, shop around, get multiple quotes, check out digital or online insurers, understand what's covered, and adjust your policy as life changes. Remember, insurance is all about peace of mind. Number 8, automated savings and investments. Here's a quick question. How much easier is it to stick to a workout routine when you've already scheduled it into your week? A whole lot easier, right? The same logic applies to savings. If you're manually transferring money every month, it's much easier to skip it or forget to do so. But did you know that people who automate their savings and investments tend to be wealthier in the long run? The trick is simple. Set up automatic transfers to your savings account right after payday. Even starting with a small percentage can snowball over time. It's the classic out of sight, out of mind strategy, but for your bank account. Number 9, continuing education. Ever heard of the saying, knowledge is power? Well, of course we all have, and it's truer now than ever. In today's fast-paced world, industries are evolving, technology's advancing, and job requirements are shifting. And it's more important than ever to build a side hustle to diversify your income streams. So how do you keep up and ensure you have the right skills and knowledge? By dedicating yourself to lifelong learning. Whether it's a professional certification, an online course, or attending workshops, there's a world of knowledge out there waiting for you. And here's a practical tip. Set a yearly education goal, allocate a budget for it, pencil in the time, and make it non-negotiable. The more you learn, the more you earn. Number 10, retirement contributions. Last but not least, let's talk about something many of us might be putting on the back burner: retirement savings. Picture this: sunny beaches, endless relaxation, and zero work emails. That's the retirement dream, right? And here's the trick. The earlier you start saving, the more comfortable that retirement life can be. A 2023 study by NerdWallet found that 60% of Americans don't even have an account that's specifically for retirement. How do you fix this? Simple. Start now. If your employer offers a 401k match, that's free money, so jump on it. Look into IRAs or other retirement accounts and aim to increase your contribution bit by bit every year. A handy hack: automate those contributions. Before you know it, you'll be sipping cocktails by the beach, thanking your younger self for planning ahead. Check out these videos next on more useful tips on how to better spend that hard-earned money.